Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Tuesday, February 4th. This is our live pre-market trade plan setup where we take a look at the market macro to micro, and then we drill down to the structure and choose where our trade levels are going to be and our trade plan and what our targets and hypotheses are, or hypotheses. My name is Doug McKay. I'm the founder and head moderator of Quantum Leap Futures. We do this pre-market session every morning, then we do live trading and analysis during the course of the day. If you're interested in coming in and checking us out, I'll put our contact information up in just 1 second, but please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results in any trades that you see in Quantum Leap or for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you do want to get a hold of me, please send me an email at quantumleapfutures@gmail.com or call me 647-545-8065. Sorry, no website, no blog. This is all live, all day, all every day, and it's not really a commercial venture. We're just here to help traders and share and really create a self-organized learning environment, or what we call a SOL. You will need a Skype account, so that's easy to do. It takes about 1 minute to do. Open up a Skype, send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And if you like this video, you can check a lot of them out. There's over 300 pre-market videos we do every morning, and it's up on YouTube. Just do a search for Quantum Leap Futures. And if you like what I do, follow me on Twitter. Okay, so let's take a look at yesterday. Yesterday was just a very interesting day. First of all, we tried to get short, but I had technical difficulties. We had a tick gap. The tick opened up at like plus 1400 yesterday. It was a beautiful one-done trade, and my charts froze for some reason or another, and I missed the trade, and we just crushed. They just crushed it. 34.25 point, then 5.5, and another 15 down. And I tried to catch a falling knife, got myself in all kinds of trouble, and finally worked my way out of it, and then called it a day. I closed it down right about here, and after flipping from LIFO to FIFO and working and building it back, I was actually able to get back in a positive mode. Then I took the rest of the day off because I put myself in the penalty box because I put too much risk on the table. Gotta stop doing that. That is very dangerous. This market could have really crushed me yesterday, and the market was very kind to me with this rotation back up. But lo and behold, this whole sell-off, they took it all back, and here we are back in the 1900s when we closed last day. What a crazy day that was. Really created a dragonfly doji on the daily RTH session, and we'll talk about that and what that could possibly mean. But overall, I had a terrible day that turned out to be a profitable day, but it's all about luck, and gotta learn not to put so much risk on the table. News today, we had unemployment claims. They came out worse than expected. We had prelim non-farm came out worse than expected. Preliminary unit labor costs came out higher than expected. At 10 o'clock, we have factory orders. 10:30, we have natural gas. That's about the only news that we have for the day. Of course, I like to start each day with a basic candlestick chart and then 2 moving averages. I use a 9 EMA and a 20 SMA. I'm looking for slope and separation and where the trend is being challenged. You see on the monthly, it is beautiful upward trend for the last couple of years, and then bam, we're down below the 9 and the 20, and we had violated the trend, and we're starting to get a little bit of a separation, a little bit of slope, but we do have a foo bar, Mr. Sneaky, on the monthly, which is a reversal pattern to the upside. So it should be interesting. But remember, got to keep things in terms of the time frame, and that is on the monthly. On the weekly, We do have slope and separation to the downside. We created this technical gap. We talked about coming up and closing this gap. Doesn't really get closed until we get back up into the 1950 area. Of course, we could close it just by going sideways as well, but so far we've rejected and we've come down. We're trading back into the 1800s. The trend on the weekly is down. On the daily, we have consolidation. We're just, we're trying to hold above the 9 and the 20, but now we're coming down today, and we're, trying to get below it right now. And we do have a little bit of a slope and separation or continuation starting on the daily, but overall, we are in consolidation after this downward trend. On the 4-hour, we have just basically consolidation, but we're back below the 9 and the 20, and seeing some weakness coming in. On the 1-hour, you can see same thing. We had tried to get into this upward trend. We'd rolled over last night, and now we're below the 9 and 20. We will get a naked cross here at 1908.50. Mark that down in your journal. On the 30-minute, you can see we're accelerating things. This is showing that we've got a bit of a technical gap, but price is paralleling the 9 nicely, and this is a pretty strong trend down since we rolled over last night, basically when Europe opened. Going to the 15-minute, you can see that this is accelerating as well. And price is paralleling the 9 quite nicely. And lastly, the 5, you can see you've got good slope and separation here. Got a little bit of Mr. Sneaky in a technical gap. That gap will get filled at 1896.50, but coming into the RTH session, we definitely see weakness. Going into the daily, the 4-day microcomposite thought this was going to be a trend day yesterday, and it took it out of the balance area and put it back in because we closed basically on a doji, dragonfly doji here, which is usually a reversal pattern, but there's no reason we can't come down to this 1890. What I want to do this morning is I just want to, come on, let me do it. I want to draw a overall profile because we're chopping around this area. So I want to bring all this volume in, and I want to see what we have here in terms if there's any change in the overall profile. So nope, going back all the way to, what day is this? All the way to the 7th of January in this bigger balance area now. The overall microcomposite is still at 1890. So the last 9-day microcomposite is confirming with the longer time frame value at 1890. So we're not getting away from this 1890 too quick. This whole area between 41 and 70, a lot of undetermined fair value. I think we're going to get a ping pong match between this 1906 and 1890 today as they chop around. I don't think we're going to get a big downdraft like we did yesterday. I think we're going to get tighter rotations, and we're going to get stuck in this wick right here, somewhere probably between 975 and the 91, possibly even down to the 70. But I'm not anticipating testing the lower distribution from yesterday. I'm really expecting to stick in this area, probably between the 1881.50 and the 1909.75. 975 is going to be our line in the sand above. Above that, we get into this upper distribution. Okay, but this is very blunt. This has got a lot of undetermined fair value. We're going to chop around in this area for the next couple days, in my personal opinion. My main hypothesis is very much like yesterday. I mean, I wasn't too far off the, off of the hypothesis yesterday. I said yesterday we got below the 975 and couldn't get it back above it. We'd chop in this distribution zone between 70 and 975. Well, we dipped a little bit below there down to the low of yesterday, which was what was low? 65, but then right back up again, and we just chopped around in this area and basically took everything back at the end of the day. Um, doesn't change today. Today I'm expecting chop in this area below the 975 and the 8150 area. If we do get above the 975, chop in this area between the 1933 and the 975. But I personally think we're probably going to spend most of our day down in this distribution. We got undetermined fair value at this 88 can go away. 86.75, 90, 95.75, 1905, and 1906. I think we're going to spend most of our time in this area. So we're going to get a rotational day with a little bit of a upward bias to possibly poke into the 1900s. Let's take a look at overnight. Overnight, again, fairly large range overnight. Our overnight high was 1922 and a quarter. Get rid of this first. Overnight high 22 and a quarter. And overnight low was all the way down at 90 and a quarter, which we just put in. And we could put in another overnight low during the course of the session, so we'll just have to pay attention. I don't think that the VPOC is going to shift from overnight. It's at 1917. And I do have to change our upward ATR range. Our overnight low is 1890 and a quarter. Our 20-day ATR is 4963. And it puts our upward ATR target all the way up at 1939.75. I had set these, but we obviously had changed. Our downside ATR is not going to change. It's down here at 1872.75. Do I need to reset? I think I need to reset the weeklies. Do I need to reset the weeklies? Let me just check that. Okay, so our low is 1865 and our high is 1940. So I don't have to set the low. 1865 plus 74.56 puts our, oh, that's interesting, puts our weekly at 1939.56. Right below our daily. Well, we do have a bit of a cluster going on there. So our daily ATR and our weekly ATR and our key line in the sand and that range high all sitting right here at that 1940, 1941 level. So that's interesting. Don't think we're going to get there though today. Okay, so is there anything else? We need an LVN, don't we? We need this LVN right here, and no surprise, it's going to be 1903.75. Where did we hear that before? Man, this stuff is good. 1903.75. We were using that all week. Okay, so we don't need this. Get rid of it. See ya. Open up this, expand it. Look at that doji. Oh, that's just incredible. Okay, so we have obviously a triple distribution from yesterday. Our key LVN is going to be right here by the floor pivot at 1894. It is in right by this HVN, but we have to, because this is longer term and undetermined fair value, we have to go with the shorter term to determine the level. So we are going to use the 1894 as a key trade area, where this area from yesterday is pretty blunt right here, going to be tough to trade. It's pretty blunt here, going to be tough to trade, but we could use this 1897, 1898 area. Why not? Let's use it. And below there, I'm going to look for shorts into this 94 and coming down towards this lower distribution. But let's do the upward. Very blunt here. So above the 98, I'd be looking for a move. Screw the 1900. I mean, we've been slicing through that left and right. Doesn't mean squat, even though it's a centennial number. I'd be using the 98, 97, 75 as your key area this morning. Above there, look for them to go and pop into the 1900s and go and test this 1903.75. I don't know why it's not 375. And back to the scene of the crime, the FOMC number, and a push through to the naked VPOC up here at 06 and a quarter. And then our gap close is going to be the 1908 close from yesterday. And then we don't need this opening swing high. And then above that, we've got the 1075. I'm going to use the 975 again because it has been beautiful. It was beautiful yesterday. Too bad we couldn't trade it. And above that, be looking for a test of the value area high at 1175. But I'm going to use this as a slush zone between 1175 and 1275. I want to be above 1275 to get long into testing this 15. And none of our targets to the upside are really going to change. We've got the change percentage of range target at 1875, the 1920 CHVN and the overnight high at 22 and a quarter. A little bit of the resistance going to come in at this 2450. That's the larger time frame microcomposite value area high. That's the one that now goes back. We just created a new. In fact, let's do this so that you can see this much better. Let's change this to cyan. And we want to make it bigger and apply it. So you can see we're in this larger time frame value area now that goes down to the 1863 and up to the 2450 area. So 2450 is going to be our key line in the sand above us. Bam. And then, of course, we've got our month open, and just in front of that, we have this 27 area. I still like that 27. And then we have our gap, our naked VPOC, our month open all up here. And of course, we do have range today because we just have a huge 20-day average true range to get up into this area up here, which is our weekly and our daily upside target. And of course, the next key line above us, which is going to be the 41. Let's not, actually, it's shifted a bit, 40.50. Let's just put them all together, shall we? And of course, let's not forget our 33 level as well. Come on. Okay, so those are our upside targets. To the downside, if we get below this 98, 97, 75, look for them to come down, test the LVN from yesterday, and then below that, our key target this morning is going to be here at 90 and a quarter. We've got the VWAP and the midpoint at 88.75, and then our target, our main target below that is going to be where the VPOC was for part of the day yesterday, down here at 84.50. And remember that this is our magnet right now. I could put it in there, but it's already our overnight low, so it becomes a magnet anyway, but it is the most traded price, so we're not getting away from it. Below that, we have the 78.75 to 79.75. I'm going to use the 79.75 because it's our value area low from yesterday, but I would be not trying to short it until you get below that 78.75 because we could bounce from there. But it is pretty blunt right here. And then our key line in the sand below is going to be the 70. We have our daily ATR downside target here. You can also target the 76 and a quarter area below the 78.75. Below 70, I think it's a trip to the value area low, and what we left down here, which is still this naked gap at 61. So I would use the weekly ATR target and the range low from yesterday and accelerate down into the 61. Below that, we have the 57.50. We have a little bit of support, but not much at 55.75. And then our key line and key support levels down here at 48.75. Below that, it's all over, gang. We all the way down into these lower 1800s and probably even into the 1700s. They've taken a couple dips down. They get back below the 63 level. It's back into price discovery to the lower side and likely to come down and get stuck in this wick down here between the 1800 and the 1832 level. Okay, so let's just take a look at the Keltner. We have got a pretty flat Keltner right now. The 1895.50 is the center line. So if we can't hold this 98, look for them to come down and test us. Below 95, look at that. Right back down to the microcomposite VPOC at 1890, which is also the Keltner center line. If we hold above and we start creeping up, a test of the upper Keltner is right at the 24-hour or the Globex value area, right in between that 1900 and 1901 area. And then we've got the 1908.50 VWAP above us and the overnight VPOC at 17. Take a quick look at gold, shall we? Why not? Bring everything in here. Gold continues to stay in price discovery. We did hit that target we were talking about up here at 45 yesterday. We're holding above this CLVN here at 42. The key line in the sand above is going to be the 1150. Above 1150, look for 53, 54. But remember, the main target right now on the shorter time frame is still up here at 66. Longer time frame is up here, expecting them to hit 1200 at some point in time in 2016 as we grind through this and back up to the most traded price since 2008. Not going to get away from that magnet. If you got a big account, get long, stay long. Why not? Have fun. If we get below this 42, I'd be looking for a move back down into 36 and possibly even all the way down here to 1127. This 29.40, don't just discount it altogether. It's going to be more about this 32, and if we get below 32, this 29 is not going to hold. It's going to come back down into the 27. That's the longer term value area high. It's a shorter time frame VPOC. So if we can't hold, I would even say if we don't hold 37, that we're likely to get to 27. You have a nice $1,000 one lot trade from there to here. And then below the VPOC, if the VPOC and the value area doesn't hold, bigger move down into the 1116, 1117 area, and probably even down into the 1111. Below 1111, I think gold's going to make a bigger move back towards where we just broke out of and down to the 1100s to test the 1100s again. Below there, 94, 87, 72, hut, and the key line is right here, down here in the 1059, 1060 area. Below that, it's all over. It's going to come down. No support. Absolutely no support. All right, that's going to complete our pre-market trade plan setup. As always, trade well, trade safe, and catch you on the flip side.